This is our Forex blog for December 10th, 2012. Most days I go over our currency meter, shows the strongest currencies to buy and the weakest ones to sell. Then I show you the charts and how to get in and out. Today, because I was basically working on some automated systems which I left running overnight, and also I leave my own trading workspace running as well that I need to trade on, I'm not able to do a normal blog today. But I would like to go over some of the new enhancements that we're going to release in today's version. There was a new one that last Friday, which has our new Smart Trader, the new Fibonacci tools. I'm going to go over all that in today's blog video. So first of all, let me change this to 5R, which is a 5 pips per bar range chart. And I'm going to go and change this to 3 days worth of data so we can see the previous day. One of the new enhancements last week is the new Fibonacci tool. When you click Control F, draw your fibs on the chart, it lets you see Fibonacci pullback areas. You can see a new hash mark here and here, which shows a 23.8% and 78.6%. And I also now show the 1.27 fib target. A lot of times it doesn't hit the perfect fib target, and so this is a great place to shoot for. One of the new enhancements that I put in for my own trading, I like to oftentimes scalp, and I'm looking for 5 to 15 pips and do it over and over and over again. One of the ways I do this is using Keltner channels, and we've recently added the digital signal processing based center line. I created a script that I use for my own trading that has this, and I wanted to wait to release it to you guys when it was actually in our full study. So uncheck the exponential, click DSP. You don't need to see the midline, which is the center. We'll make that black, and we'll make these green. And 1.5 is the multiplier, and you can see how well this does at finding the highs, the lows, the highs. I mean, basically what I do is I don't always get in right at these levels, but I kind of wait for some signs of it running out of steam, and then I'll kind of scale in progressively. So in this case, I might have got in at the bar's close right here with, let's just, for example purposes, say 1 lot, goes up again. I might add 2 lots here. What that does is that yanks my average position closer to the last one. And so when you scale in progressively into a trade, and I don't ever do that in longer term trades, but it's usually shorter term scalping type trades. If your goal is to trade every day and make a living, this is a wonderful way to do it. So 1 lot here, 2 lots, let's say it goes up a little bit more, we got a wick here, it starts to come back down. I might have entered the 3rd position with 3 lots here. What that does is it yanks the position up from here to somewhere in between, kind of in the middle of this. And by doing so, my entry position is here. I watch it fall, and usually, depending on how fast it falls, this bar here fell pretty fast. I would be watching the next bar. I would have probably got out of that trade right here. Because we made a higher high, I might have began scalping and buying 1 lot here. And unfortunately, this one didn't give me a multiple scale-in level, so I might have only taken 5 pips on this with a much tinier position. And so that's how you can scalp. You'd have a single position here, this one right here, and always count the number of bars up. This one goes 1, 2, 3, 4. Because it's been up 4 bars in a row, I might get into 1 position here, look to get into maybe the 2nd position here. It wouldn't have gone up to my 3rd scale-in level, and so my average position would have been somewhere in the middle here. It starts coming down, I'm out. And maybe would have made 12 pips on that one. Got in again here, and again we made a higher high, so I'm definitely going to get in right at the lower band here. And that's how you use this to trade. Now, just for example purposes, let me show you what the regular one looks like in comparison, and you will see a lot of levels on here that you would not even be able to notice on the regular one. And even with a fast exponential center line, I'm going to make this one gray, and you'll be able to see, as this thing is exploding up here, the regular band is down here. This one gives you an entry right here and here. You got 2 entries here you wouldn't have had with a regular Keltner. This one right here, you have an entry you wouldn't have had with a regular Keltner. You have an entry here and here that you wouldn't have had with a regular Keltner. And that's basically it in a nutshell. You find trades that you would not find with a regular Keltner. So let me just randomly pick another currency. We'll do the pound yen. Remember, the green one is the much faster level, and the gray one is a much slower one. So here, this is an explosive trend. We pull back. We're real close to it here. It's kind of going sideways. You also have this entry right here that you would never have found with a regular Keltner because it's so lagging because it uses, you know, a much slower moving average. It's just, you know, notice this trade here you found. You would not find with a regular one. And in this case, you got into a trade, you might have scaled in a little bit here, you would have a much bigger position here where you would be afraid to do that with a regular Keltner. You can basically put on, you know, 150% of your normal or whatever trading size you feel comfortable with. I feel like I can trade 50% bigger and more lots with my scaling approach than I can before. And when combined with smart, you know, Fibonacci areas, support resistance on the chart. Let's say you drew this right here. Here's the upper Keltner channel. Anytime you're in a trade, let's say for this one right here, when the market's kind of going sideways, be very careful. If it hits an upper Keltner channel and doesn't pull back, at least, you know, the 38% level, it's probably going to go higher. So just because it's above the upper Keltner channel, I'm not always buying and selling. In this case, I would start my scaling at the 1.382 or maybe the new 1.27 and get in, you know, 4 or 5 pips better entry for my first position. I'm getting in again, and I prefer to put my final position at the 1.618. And so, you know, by doing that, my average position might be somewhere around 03, pulls all the way back down here to 93. I have up to a potential of 10 full pips to be made on there. Now, obviously, you're using our statistical tools to find out how strong or weak it is at the same time. Now, let me not just go over this tool today. Let me showcase our new Smart Trader window. If you click on Smart Trader in the chart examples, uncheck this if you want to add it to an existing workspace. And it's going to open it, and it's going to leave what we have running already. And again, what this does is it lets you see the 4-hour statistical high and low, the 1-hour statistical high and low. It gives you the option of showing the 15-minute and 30-minute statistical high and low, as well as the 1 standard deviation. And it automatically scales the chart to the 4-hour statistical 1 standard deviation high and low. So you can kind of get a feel for what the likely maximum 4-hour high is, 4-hour low. And what I've found is if I'm watching the chart, and let me put this on a pound yen chart. So you can see 132.65 is likely to be the highest high for the next 4 hours based on the last 20 days averages in 1 standard deviation. It almost never goes above the 1 standard deviation 4-hour high or low. The lowest it probably could go in the next 4 hours is 132.02. So if I created this because I really have always traded the futures by S&P futures, NASDAQ, Dow, and Russell by scaling in the trades because it's very hard to pinpoint exact entry levels, and those markets move around so much that you can scale into a trade, it'll come back a point or two, you can get out of your trade even though the trend is going to continue higher. You can scalp your way in and out of really big positions and really make a great living trading. It's very fun, it's exciting, and it's really low stress. With Forex, I've always been a little hesitant to do that because it doesn't quite trade as fast as the futures markets do. That being said, with this, and it's impossible to look at all the levels you want on a regular chart. Let me just showcase what this would look like on the chart. I'm going to remove the Keltners for now. Remember, the new Keltner channel has the DSP centerline option. We're going to release that later today. If I were to go and add the range projection, and I'm not going to even show the 15-minute on this, but the 30-minute along with the 1 standard deviation. Notice all the lines that are on your chart. The 60-minute, the 240-minute. obviously this becomes an unreadable mess. And this is not using and not showing you our containment bands, which show you the upper and likely lower low. I'm just going to showcase you the ridiculousness and the unworkability of what led to this discovery and invention of mine. We're going to turn that off. We're going to put the DSP center line on here. You put the 1.5 band on here, the 2 and the 3. And remember, you can also now showcase and show wider and thicker levels for the center line or the bands. And so the 3 is not even going to show up on here. Now that's just our containment bands and all the different statistical levels we would want to see. Now consider adding the previous days, weeks, and months high and low to the chart and the pivots. It becomes an unreadable mess. So basically, I got sick of missing really high probability trades because of not knowing where all these support resistance levels are. This is probably the minimum that I would want to look at on my charts. Now, I also added the daily moving averages. It shows a 10, 20, and 50 and 200-day moving average. So with all these things on the chart, this, as you can see, is totally unreadable. Now again, if you fast forward through the video and you're just looking at this, I am not advocating having all these things on your chart. What I am advocating is having the containment bands on your chart. You can put the daily moving averages, pivots, daily, weekly, monthly, previous days, weeks, and months high and low. But we're going to remove the 30-minute and 60-minute range projection so that you only see the 4-hour on here if you want. And then you can see all the other levels you need on a little tiny window, which you can, create over here on the left. You can also plus and minus into it to make these bigger or smaller and make this footprint of this smart window as tiny as you want. And now you know when you're looking at your chart, you're drawing your fibs on here, you have an idea of where safe entries are, and you also know whether it's a 30-minute statistical low, the 60-minute statistical low, the 1 standard deviation 60-minute low, and so forth. And I also have other containment bands on here that show up as orange. And so these levels, don't get hit that often, but these are pretty relatively safe scaling levels. If you think the market's going to go down, but it's going up right now, and you want to scale into a short position, this is a really high probability area. You might start at 122.44 and scale in up to 132.53. Or if the trend's really strong, you might set an alert, which you can do right here on the window. Create an alert, put your cell phone message on here, and you can drag that wherever you want and not watch the charts. Set your alerts for all your currencies that you trade. Go perform your job, or whatever you want to do around the house. Watch TV, play video games, read the news, do whatever you want. And when the market gets to these high probability levels, you'll be notified. You can scale into positions, set your stop, your targets, or and once you're in a trade, you have an idea of where it's likely to go. If it's really a strong uptrend, it's probably not going to go below the 30-minute statistical low. So let's say I was short up here around 132.50, and I'd like to get out of this trade at 132.20, but it's not likely to go down there. I might put my stop at, or my target alert at 132.32, 31, 32, 33, and wait for price to hit that, and I don't have to watch the charts. So there's a lot of different things that you can do with these smart windows. They're very powerful. I've used them for the last 4 or 5 days and have taken a ton of trades with them. I love them. I think it's one of the best tools in the software, and I really think I can trade just with these by themselves. It always helps to look at the longer term trend, and our real-time statistical tools help. But even the strongest trends go to these levels and bounce off 3 to 10 pips. And even last week I was buying the euro dollar as it fell and made money on every little scale and buy, even though some of the profits were only 3 to 5 pips. These levels work, and you can judge the speed of it, especially by looking at the regular chart. When it starts kind of slowing down its descent, you can kind of start to get into your trades, especially when they're underneath the statistical likely lows. And it's that simple. So use the new digital signal processing based Keltner channels, 1.5, 2, put those on your charts. They make amazing entries, And in my opinion, you can make a living just with those tools alone. And this will help you also know the statistical levels while keeping your charts as uncluttered as possible. And you will know every single key support resistance level that all the professional traders use without confusing the hell out of you in the process.